Hey guys, how you doing? Today we're going to talk about why invest in a low cap rate market. As you know, I'm from Toronto and the Toronto market, and Toronto has the lowest cap rates in North America, or it's up there for sure. So CBRE cap rates, Google that, you should be able to find this information. Toronto third quarter multifamily A class, the rate's between 2.75 and 3.75. So this rate is based on location and the quality of the building. Today we're going to discuss 3 investment strategies for multifamily. First is turnkey, value add, and development. We're not going to talk about development today. This is going to be a longer segment that I have sometime down the road. Turnkey. This is when you get a property on a platter. Property management's in place, leases are there, and very low maintenance. It's pretty much close, collect, let the manager take care of it, you're good to go. My friends always ask me, why I'm going to put $1 million on an A-class property to get $27,500 a year? I was like, dude, first of all, you can't get $1 million property, A-class property in Toronto for that much. Secondly, it's not for you. People who invest in this, or companies who invest in this, hedge funds, REITs, large corporations that just have a bunch of money to put into something that's really safe, location-wise, and building. They don't care too much about return. It's about the security. We're going to talk more today about value add. Here's a scenario of a value add building that we're going to take a look at, see what the value is, and then once we put it up to par, add value to it, you're going to see the difference in the value after. So this is a 3 cap. I'm going to use 3 cap because first of all, it's easier to calculate. Secondly, you're not going to pay 2.75 for a value add because you got to add value to it. You're not going to pay the lowest cap rate that's out there. 20 units, 90% occupancy, currently at $1,900 rent. The market's at $2,000 rent. So let's work this out. So we got, not rocket science, 90% occupancy of 20 units is 18 times the current market rent, 1,900. What do we get there? We got 34,200. So annually is what? Multiply that by 12, you got 4,100 and 400. 410,400. This is the gross. Okay? Now, we're going to use 25% for argument's sake on the expenses. Okay, so 75% is going to be the NOI. So I'm going to multiply this by 75%. So the NOI is going to equal 307,800. That's the NOI. Okay? So now we're going to 3 cap that. It's going to equal the value, which is, I'll put it up here, guys. $10,260,000. Okay? That's the value of this. So you're going to buy this. As you can see, there's upside on this, right? The market rent is low, about 100 per unit, and there's 2 vacancies. So this is a value add. So so your goal is to get everything back up to market rents and fully occupy it. So this is what's going to happen. So 20 units. You multiply that by 2,000 market rent. What are you going to get? Easy. 40K. Multiply that by 12 annually, 480K. Okay? Now we're going to use the same 75%. So this is the gross. So we're going to use the same 75% for NOI. So easy math. 360K for NOI. Look at that compared to that. As you know, if this NOI increases, the value increases. If the cap rate is lower, the value increases as well. Now you might be thinking, okay, you fully occupy it, you spend money into it, you raise the market rents. Should this be a 2.75 instead of a 3? It can be. It depends who looks at it, right? But for argument's sake, let's just use the 3 cap, okay? So 3 cap this. Divided by 3, NOI, what are you going to get? It's 12 million. So you took a property that was worth $10,260,000, raised the rents, fully occupied it, now it's worth $12 million. That's the beauty of value adding low cap rate in a low cap rate market. Here's something else I want to show you. So 3 cap. Okay? Another way to figure out the value, you could divide 100. Let me do it over here. 100 divided by 3, which is 33.3. So you can basically multiply the NOI by 33.3, it'll get you the value. It's the same thing. Why am I showing you this? Here's why I'm showing you this. So they up the rent $100 a month. Okay? $100 a month. $1,200 a year. You multiply that by 33.3. Each unit, you just increase the value of the property by $40,000. That's the beauty of low cap rate. Now think about this. If it's a 10 cap rate, 10 cap building, okay? You're multiplying it by 10. Pretty easy math, right? So now, $1,200 a year times 10 is what? $12K. So you're making $40K on that same value add on a 3 cap versus a 10 cap, where you get only $12K. That's the beauty of it. Hope you guys enjoy this. I hope you like it. If you have any questions, you can comment below. I hope you guys have a great night, and thanks for watching.